Hey everybody, Boris Lasser from BK Forex. Welcome to our Forex weekly tech notes for 2.3 through 2.7.14. Euro crumble. Well, definitely a very interesting week for the euro as we closed out. Let's take a look at the charts. Euro basically gave up the key 135 level at the end of the week, suggesting that we now may have finally the break of this box. We've been trading this 35, 37 box for almost a month now. And as the month came to a close, this 35 is given on fears of disinflationary pressures in the Eurozone, fears that maybe the ECB is going to have to ease or at least threaten the possibility of negative interest rates as we go forward. And all of this against basically a backdrop of where the Fed continues to tighten and the U.S. data, while nowhere near great, remains decent enough that there is no possibility of QE hold or taper hold for the near term. So you have this disconnect between the Europeans possibly having to get more dovish and the Americans remaining relatively hawkish. And as that disparity continues to play out, you start to see the euro begin to finally give back. On a longer term basis, you really start to see the failure begin to form here. You obviously sort of topped out here at the 38s. The spike out here was the final kind of a gasp of the euro bulls, and then you made a lower high over here right at the end of January, and now as the month came to a close, this crumble through the 35 level, and the fact that that support did not hold suggests that at least very minimum we have potential for 34.50, and ultimately we're really going to be targeting 34 in the near term as a downside target in the euro. And of course, on a longer term basis, the real big test is going to be this 33 bottom here for a potential double bottom. And that would suggest then that we're either going to have the bottom end of this massive channel, which we've been in since effectively November. So the channel has been essentially a 500 pip channel between 33 and 38. Or if this is truly a really, really big distribution top, then the next level further down the road is going to be 31. I don't think it's going to be a straight drop down, but certainly the momentum for now has definitely accelerated to the downside, and this kind of a drive to the downside potentially really puts it on target towards the 34.50, 3400 as a potential move. To the top side, the cap is initially 36, and then of course the really big cap is 37. And if we come back all the way out here, that would just simply suggest a more churn, more channel surfing. But in the near term, it really looks to be a downside bias, and the euro targeting 34 is the next first target for the shorts. Now, yen, on the other hand, has also kind of given back a lot of its strength. We've had multiple failures here, and as you come to the end of the month, ironically enough, you also see the dollar weaken. While the dollar is strengthening against the euro, it weakens against the yen here. Primarily, this 102 level, which many people have noted, we've tested 1, 2, 3, 4, 5 times now, becomes a really, really big hold. If we can't bounce off of here, if we really can't find some sort of a decent support off the 102, the pressure to the downside and the ability to want to run stops here really opens up the prospect of certainly a 101, and then of course the really, really big seminal psychological level of the 100. The 100 was the one where we broke out, if you remember, basically in November. This break above the 150 is what commenced the big leg in the rally, the 500-point leg in the rally that kind of topped out at 105. We've tried to break 105 several times, broke down below it, and now we could retrace it all the way down here. That may be a longer-term prospect unless we have some just unbelievably vicious risk aversion flows that begin. But certainly the probe below the 102 is very tempting for the shorts. And if we have a down opening in the Nikkei in Asia, especially after the holiday, it'll be interesting to see just how far and how much support there is over here. They may let it run all the way down to 101.50 before buyers materialize. We'll have to watch and see how it shapes up into the beginning of next week. Cable, of course, has been the relative stalwart. It's shown a lot of relative strength here, but it's also starting to come down against the dollar, and the failure over here, especially today, the inability to hold the 64.50 level connotes that maybe we can have more distribution to the downside. We don't have too much data next week on the UK side. We do have UK PMI service. Well, excuse me, we do have all the PMI services. I take it back. But the real big number is going to be at the end of the week with UK PMI services, and that's going to sort of give us a clue. The big question out on cable, of course, is did the growth peak? Has all the numbers have been the best over the last 2 months, and are we now starting to see kind of a retrace in the UK economy, which would put more pressure down on cable and sort of destroy its relative strength that it's been having. One of the interesting things when you look at the cable story is that, of course, euro pound has been to the downside significantly. But what you're seeing here is that while euro pound did test the 82 level, hasn't really kind of ended on the lows here. And of course, there's this big support at 81.70. So the question of just how weak the euro is going to be and sort of the relative strength of cable is going to depend on how well we can hold this 81.70 level. A breakdown here really does open up much further distribution, possibly all the way out to 81 and maybe even all the way down to 80 on a longer term basis. There is a good case to be made for relative strength of cable towards the euro, but technically you really need to have the market prove it to you by breaking this 81.70 level to the downside. And then when you look at the Aussie, we have been talking about the fact that the Aussie has definitely been trying to form a very solid base here at this 86.50 after massive sell-offs continuously. The signature trade in the Aussie has been big sell-offs and then almost a month of consolidation around a base. So the original base here, for example, was around 90.91. The secondary base here was just sort of below sort of 88.50 to around 90 as it consolidated. Then there was a break all the way down to 86.50, and now it seems to be that the sort of 86.50, 88 is the base channel that Aussie is trying to constrain and control. We do have RBA meeting next week. This could be interesting to see. It's certainly a big shocker if RBA does cut rates. Nobody's expecting them to, but if they do cut rates, that could be the straw that breaks the camel's back and takes us below this 86.50, perhaps initiates a new leg of downside movement. But for the time being, it looks to be a consolidative for the Aussie, this 86.50 kind of holding, and you might get a relief rally on the fact that the RBA does not hike rates, and especially if the language that they use doesn't suggest that there's a rate cut anytime in the near future. So we're going to be watching this very carefully over the next week. This 86.50 for Aussie, absolutely seminal as far as the support goes. The Kiwi had a lot of relative strength, but then it unwound a lot of its relative strength, and this has been a really interesting unwind of the relative strength here, mainly because market had run up so high on the idea that the RBNZ was going to definitely hike rates in March. And although RBNZ did promise they were going to hike rates, March was not a definitive yes. And that kind of disappointment really created 3 days of really steep profit taking in the Kiwi. Took us all the way basically to this 80.50 level, which is a pretty interesting support. It's clearly a double bottom test here over here. But it feels to be like a distribution in Kiwi could potentially take us all the way through this 80 level. It should be like right around here. Sort of 80 support level. This was a former breakout level. Then it came back. We broke out again above it, and a test all the way back down to 80. Sort of a very big psychological test to the downside. Probably going to bring in a lot of buyers right underneath the round number. But the shorts are definitely going to want to try to press this all the way down. This actually brings up the other idea that you're seeing. This particular cross really began to start to short cover, and today was a second day where this short covering, which we after a massive distribution here, definitely puts it in play. Looking at this long-term wave, so you basically have 116 against 105, so we're pretty much at basically a third of the Fibonacci retrace. So this 108 to 109, I think very much the level of where you're going to find a lot more resistance for the Aussie Kiwi cross, but the short covering pressing up to 109 could be possible as a natural 1/3 retrace level off this very big down leg that we've had in the Aussie Kiwi, and that could potentially also push Kiwi lower, Aussie higher on this particular dynamic. And then last but not least, we saw dollar CAD break the 112 level this week. That was seminal. That was sort of the big target that a lot of people were looking at as a big extension Fibonacci target. Now that it broke the 112 in a typical CAD fashion, the moment it tagged it came back down on some profit taking. We also had at the end of the week relatively positive news that the Keystone Pipeline may be approved in the U.S. That gives Canadian energy potentially a boost, and potentially a big boost for the Canadian economy, although it's all long-term and downturn, but that could be one of those sort of background positive catalysts that allows us to see a little bit of profit taking. The 111 level, clearly a big now support after this massive down leg, but it looks to be distributive. The dollar CAD looks to be very distributive here. 112 certainly the near term top, and a potential retrace down to 110, very tenable as we go forward. Which, by the way, of course, shows that if you sort of short Euro CAD as we are, there may be a potential here for further downside action. And with the EuroCAD, in other words, if dollar CAD comes down to 110, EuroCAD certainly has the potential here to come down to 148 support over the next couple of days. So that's pretty much how the week shapes up. There's tremendous amount of event risk at the end of the week, of course, with both the ECB and the NFP numbers. But the central story, the central ending of this week and the big theme for next week is going to be just how low can the euro go as we go forward. Wishing you guys the best of luck, the best of trading. Boris Schlossberg, over and out.